Dear all, this is CS Jata. In today's Crack the Code series, we are going to understand the implication of GST with respect to Resident Welfare Association. This is a very big sector and it is gaining momentum in the recent times because of various reasons. One is that the growing population, which prefers, in particular, the younger generation, which prefers the apartment style of living. And also there are many more migrants who are coming into the city. And the third thing is that even in the Mofussil areas, the style of living is changing from independent houses to group housing. So this sector in the recent times, if you look at it, it has gained momentum and it is growing as rapidly as any other sector. So when it comes to the compliance, GST plays a very vital role. In today's session, we will understand the impact of GST in this particular sector. Provisions with respect to this sector from the GST angle. And we will also understand the recent notifications and circulars issued by the department and CBIC's view on the real estate sector, and the judicial review with respect to this sector, where there are various cases are pending before various authorities and at High Court level. Let us understand what is the status of that. Further, we will also understand what are the best practices to be followed in terms of GST compliance and understanding the law, and what position the Resident Welfare Association can take when it comes to different views in terms of compliance and the statutory provisions. And also I would be adding my perspective with respect to this industry. So let's move on to the statutory provisions. When we look at GST, first we need to understand from the angle of Resident Welfare Association, where does it fit in? So section 284 talks about the definition of a person. So the Resident Welfare Association is registered as per the respective state laws. In some of the states, it's been registered as Association of Persons. In some of the states, it's been registered under Societies Registration Act as a trust. In some of the states, it has been registered as a cooperative society. So when we refer to section 284 of CGST Act, it says that an association of persons or body of individuals, whether incorporated or not in India, and a cooperative society or society as registered under Societies Registration Act. It means that all the types of persons are being covered under the definition of person with respect to Resident Welfare Association. Now, the second and most important definition, which forms the pillar of GST, is supply. It's time for us to understand whether the services rendered by the association to its members falls under the definition of supply. So when you look at the definition of supply, supply has got 8 forms. It includes 8 forms of supply, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made between 2 persons for a consideration in the course or furtherance of business. So from reading the definition of supply, prima facie, it falls within the definition of supply because of the simple reasons that the association is rendering service to its members for a subscription. We call it as a contribution or CAM charges, and which is called as a consideration. And the association is also in the course or furtherance of business as per the definition of section 217 of CGST Act, which talks about, there is a subclause E, which talks about provision by a club, association, society, or for a subscription or any other person of the facilities or benefits to its members. It means that the services rendered by the association to its members falls within the definition of supply. Hence, GST is applicable. This is the prima facie understanding of the applicability of GST with respect to RWA. And also there is a recent insertion with retrospective amendment in the form of subclause AA, which states that the activities or transaction by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration has also been included in the definition of supply. Section 231, if you call it definition section, which talks about consideration, that also consideration includes whether any amount received in respect of services is also called as a consideration, and any deposit which is going to be applied for future services will also fall within the definition of consideration. Now, let's move on to the next pillar of GST, which is input tax credit, which talks about section 17(2), which talks about where the goods or services both are used by a registered person for partly affecting taxable as well as exempted supply, then the amount of credit shall be restricted to input tax credit attributable to the said taxable supplies. It means that when the RWA is rendering services which are taxable as well as exempted, then the input tax credit would be proportionately available. So how is it proportionately available? How do we have to avail such input tax credit has been dealt in Rule 42 of the CGST rules. And when it comes to the capital goods availment of input tax credit, Rule 43 specifies the mechanism through which the input tax credit relating to capital goods, that means fixed assets, can be availed. So these are the basic provisions with respect to GST from CGST Act and rules relating to Resident Welfare Association. Now let's move on to administrative directives, where the CGST rate notification number 12/2027, which was issued on 28th June 2017, which gave an exemption up to ₹5,000 per member per month for the subscription that collected from the member to the by the association is exempt. It means that entry number 77 gives an exemption for the monthly maintenance charges up to an amount of ₹5,000. So this was issued at the time when GST was introduced. So after that, if you look at it, in the year 2018, there was an amendment to this entry number 77, which said the 5,000 amount would be increased to 7,500, considering the inflation and other parameters. This was a suggestion from GST Council, and it was implemented from 25th of January 2018. It means that up to 24th of January 2018, the basic exemption limit available for association was ₹5,000. Then from 25th of January 2018, the exemption, conditional exemption we call it, it has been enhanced to 7,500. And also there was a circular issued on 22nd of July 2019, clarifying various issues relating to Resident Welfare Association. We will understand it better as we move forward. Now, in the 37th GST Council meeting in the year 2010, it was discussed that there is a circular which was issued in 2019, which talks about the applicability of GST for Resident Welfare Association up to ₹5,000, which has been enhanced to ₹7,500, and whether that 7,500, entire 7,500 is available for exemption, or when it crosses 7,500, whether the GST to be paid on the entire amount without considering the basic exemption or not, was clarified through that circular. Then this point was discussed in the GST Council meeting, and Odisha group of ministers suggested that thereby not being any direct provision in the act or rule, the circular directly clarifying the stop. In the 37th GST Council meeting, the circular 109 was discussed in detail. The ministers suggested that the law being silent and rule being silent on the applicability of GST on the entire amount of 7,500 applicable to GST, the circular giving a clarification may be challenged in future. So it suggested for amendment in the Act. So because of this suggestion, in the Finance Act 2021, the retrospective amendment was made in the Act, stating that Section 7(1) AA was introduced through the Finance Act 2021, stating that this provision is applicable for clubs and associations, and members and association will be treated as two different persons. So it is with the retrospective amendment. So this came out as a suggestion from 37th GST Council meeting. With the retrospective amendment, it was included in the Act. So when you say in the 47th GST Council meeting, which happened in the year 2024, the point was raised considering the complexity of the provisions in the GST and complying with the rules and filing of returns and the availing the basic exemption and Rule 42 following and filing of returns, whether an ad hoc rate can be applied so that it will help the Resident Welfare Association to comply with their provisions themselves instead of seeking the help of a professionals like chartered accountants. This point was issued and it was discussed, and it was clarified that an ad hoc rate of 3%, which means instead of 18% and then taking the input tax credit on a reversal basis as per Rule 42 or 43, applying an ad hoc rate of 3% may not be workable. So this was not being considered by the GST Council. Next point was that in the same council meeting, there were debate on whether that 7,500 can be increased to 10,000 rupees, considering the increase in the cost and inflation. That also, finalized that at this point, increasing to 10,000 may not be accepted. So what we understand from this GST Council meetings minutes is that this RWA was well discussed, and the points which were clarified through circular were also discussed. So for the time being, in the near future, we may not expect increase in the basic exemption limit from 7,500 to 10,000, and the complexity in the availment of input tax credit needs to be carefully followed by all RWAs seeking the help of professionals. So now coming on to the next 53rd GST Council meeting, which happened in June 2024, it was discussed that what would be the applicability of electricity charges when it is recovered from its members, whether GST is applicable on the sum collected towards electricity, towards common area maintenance. It was clarified that when it is collected as a reimbursement supported by an individual bill as a reimbursement recovery, only then the electricity charges would be exempted from GST. Whereas if it is through common meter, then the recovery of GST in CAM charges will be part of the CAM charges only. There is no specific exemption with respect to electricity charges from the applicability of GST. So this was, the council clarified this in the 53rd GST Council meeting. Now, let us understand the applicability of registration. When it comes to registration, many of the RWAs think that registration is mandatory because their turnover, in the sense their gross receipts exceeds 20 lakhs. It need not be. We need to see under what criteria they fall under registration. Only when their other income, whether from non-members or members, other than CAM charges, because due to which the turnover has crossed 20 lakhs, then only they are liable for registration, not because of their CAM charges exceed 7,500. Obviously, if their aggregate turnover is less than 20 lakhs, they need not go for registration, which every RWA is aware of. So the doubt comes only when the gross receipts crosses 20 lakhs and the per member collection also exceeds 7,500. We need to understand the applicability of GST and examine in detail whether they really need to go for registration or not. Now, I have taken 7 to 8 scenarios, understanding and advising whether they have to go for registration or not. If you look at the scenario number 1, the CAM charges per month is only 5,500 and your annual collection during the financial year is less than 20 lakhs and their interest on savings and FD, which is an exempt income as per GST, due to which the total receipts exceeds 20 lakhs. So the RWA need not go for registration just because it has exceeded the threshold limit. Because of the simple reason that the increase in turnover is because of the exempt income. Whereas the taxable income from other incomes, namely the party hall, notice charges, move in, move out, and other incomes, non-member on member income other than CAM charges, has not been charged, or there is no such income for the RWA. Now let us take another scenario, similar scenario, where the CAM charges are only 6,500, which is well below the 7,500 limit, and the collection from CAM charges are only 19,75,000, whereas there is a 50,000 income from the party hall and other charges, other non-member income, due to which it has crossed the 20 lakh turnover. In such case, the association is mandatorily required to go for registration. And I will also tell you another scenario where the collection from CAM charges has exceeded 7,500. Let us take the scenario number 8, where it has crossed 7,500, which is 9,000 rupees, due to which the annual collection from CAM charges are only 19,75,000, whereas their taxable income is only 5,000 and exempt income is only 10,000, and it has not exceeded the threshold limit. Then in such case also, the registration is not mandatory. So you have to understand, depending on the RWA's nature of income, each case needs to be examined separately. So there is no one formula saying, yes, if the turnover exceeds 20 lakhs, they are required to go for GST registration. Once the registration is taken, they necessarily have to follow the rules and invoicing as stipulated by the law. So before going for voluntary registration, the association has to take due care whether they are falling within the mandatory conditions which are stipulated for registration as per section 22 of the CGST Act. Now let us understand the judicial review part. in understand the case of appellate authority of advance ruling Karnataka, where the appellant, that is Vaishnavi Splendor Homeowners Welfare Association, approached the advance ruling authority to clarify two issues. One was that whether GST is liable on the contribution received from members. That is, they were questioning the basics itself, though it is very clear in the act and rules, because there is a constitutional provision which is overriding constitutional provision which cannot be forfeited by any statutes. And also they wanted the clarifications for whether the GST is applicable only on the sum over and above 7,000 or on the entire sum. So they raised this before appellate authority because of the order agreed by the order of advance ruling authority. So this is more like a second level of escalation to the authorities. And this appellant argued that the members are governed by the principle of mutuality. There is a doctrine, constitutional protection for the members when they are not making profit out of their own actions. Then there is no question of applicability of any taxation laws. So this was held in favor of the assessee in the case of State of West Bengal versus Calcutta Club, wherein the Supreme Court gave ruling in favor of the assessee that there is no applicability of service tax because of the simple reason that the concept of mutuality to be followed. There are no distinct persons in the case of club, being a member and the association are one and the same. Following the same analogy which was given by the Supreme Court, the appellant, that is the Vaishnavi Splendor Homeowners Association, argued that the same logic should be applied even for associations. So the GST will not be applicable for the maintenance charges, whereas the authority argued that no, this is not this verdict was in the time period of VAT and service tax. So the same logic cannot be applied or extended in the context of GST, because the taxation point of taxation for GST is on supply, not on the services. So then coming to the second argument of the appellant, the absence of privity of contract between there is no contract between the association and the members. It is basically on the sum collected, on the expenses collected divided by the proportionately it's been shared by the members. So there is no privity of contract between the association and member, whereas the department argued that whatever they are collecting as a contribution, you call it as a contribution, will become the consideration for the contract. So if that being the case, there is a service element attached to it, and this is which falls within one of the forms of supply. So there is a supply, there is a consideration, and members and the association are two distinct persons. So it is definitely will be falling within the definition of supply, and also whatever the association is rendering will also be fitting into the definition of business in the course or furtherance of business. So applying all this logics in the GST, the association is well within the ambit of applicability of GST. So on the entire sum, it's not on the over and above 7,500. On the entire sum, the GST would be leviable. The clarification, though the circular is clarificatory in nature, it is only it is always prospective, and it took the reference of Supreme Court judgment stating wherever there is ambiguity in the exemption clarification, it has to be strict interpretation of law should be followed, and it will always be in favor of the revenue. So whereas the appellant also argued that wherever there is an ambiguity in the exemption, the benefit should be given to the assessee, whereas ultimately the AAAR in Karnataka held in favor of the revenue, stating that GST is very much applicable on the and GST is very much applicable for the Resident Welfare Association on the CAM charges. And it is not just on the over and above 7,000, but it is on the entire sum. So this was the decision and ruling held by AAAR of Karnataka. And also there was another AAR, that is Advance Ruling Authority, which in the case of Prestige Southridge Owners Association, which wanted to clarification on three things. One is that what is the applicability of GST on electricity charges if they are separately charged? See, electricity charges, some of the associations takes the stand that electricity charges can be separately charged rather than clubbing it with CAM charges, so that it will not exceed the 7,500 limit. So the position taken by the association is that electricity being goods, and also there is no levy, there is a clear exemption for electricity charges. So why should it be treated as a composite supply? So it has to be, if it is separately levied in a different invoice, it will not fall within the ambit of GST. So they wanted clarification on this point. And second is that corpus fund is also collected for future purpose, for future planned expenditure. So whether GST is applicable at the time of collection. Third question is that if there are few members in the association, members of the association hold 2 or 3 apartments, say for any resident, it is a common practice in general that if they like one apartment, they book another apartment also. So they become the owner of 2-3 apartments. If that being the case, whether that 7,500 should be applied on a member basis or on the per apartment, per flat basis. Because if you look at the bylaws, the voting right will be the only one. They may be owning 3 apartments or 5 apartments or 10 apartments, but the voting right would be only one. So considering that, whether will they be allowed 7,500 only once, exemption 7,500 only once, or per apartment, per flat basis, they will be applied. So this was the question posted before the Advance Ruling Authority. So the Advance Ruling Authority clarified that the electricity bill is received in the name of the association towards the common maintenance charges, common electricity charges. So this is basically shared as a reimbursement on a proportionate basis, depending on the square feet area of the residence. So if that being the case, it cannot be called as a supply of electricity by the association. It is only the reimbursement of the charges, just like any other services provided by the association. This is also one of the supplies. So it will not be given as separate or distinct treatment when it comes to GST. So question number 1 was answered. The question number 2 with respect to the corpus fund. The corpus fund is actually collected for future expenditure, for any future planned capital expenditure. Since the application of funds is going to happen in the future times, at the time of collection, the Resident Welfare Association need not charge GST on those collections. So this was the clarification and ruling held by Advance Ruling Authority. And when it comes to the exemption per flat basis, they said yes, per flat basis, the member is allowed to take the exemption. Assuming if he owns 10 flats, 10 times the 7,500 per month will be eligible for exemption. So this is one of the very welcoming clarification given by the Advance Ruling Authorities. Now let's move on to what happens to the cases that are pending before the High Court and the next level. So this decision was held in the High Court of Judicature at Madras, where the Greenwood Owners Association placed before the filed a writ before the High Court of Madras. This is basically, the Greenwood Association is a petitioner, is a resident welfare association, and they were taking the exemption under notification number 12 and amendment after that, subsequent to that, notification number 2/2000 2018, which stated that up to 7,500 per month per member, the exemption is available. The petitioner challenged the circular also, 109, which states that the entire amount is taxable, which stated that entire amount is taxable, whereas the notification uses the word only up to. So the issues which were pending before the High Court was that how to calculate GST payable on the maintenance charges, whether it is on the amount exceeding 7,500 or on the entire sum. So this was the important question which was placed before the High Court of Madras. Then the case was argued and judgment was given in such a way that, considering all the points placed before the judges, the Dilip Kumar case was referred, Supreme Court judgment, which held that exemption notification should be interpreted strictly. It means when it is up to, it means that up to 7,500, the exemption should be given. Say, for example, if the maintenance charges are 8,000 rupees, then only on the 500 rupees, that is exceeding 7,500, only will be liable for GST. So, and also the circular is contradictory to the entry 77 of notification number 12. So they said that the advance ruling passed by the advance ruling authority and the circulars are to be quashed. So the contribution in excess of 7,500 alone would be liable for GST. So this was the High Court judgment. So many of the resident welfare associations wanted to rely on this High Court judgment and wanted to follow the charging of maintenance charges only above 7,500. But having said this, this is only High Court judgment, because anything which comes from the apex court, Supreme Court is the final. So this was challenged. This judgment was challenged before the higher authorities and it is pending. So for time being, we are in a status quo. We do not have any clarity from the judicial angle whether the GST to be charged on the entire sum or on the incremental portion of above 1,500 only. So if you ask me what are the general practices followed, there is a mixed view. There are associations which are not charging GST at all because they are of the opinion that the concept of mutuality, which is a constitutional provision, will prevail over any statute. So they are not charging GST at all, considering the Supreme Court verdict in the case of Calcutta Club. There are associations who are charging on the entire amount. There are associations which are charging only on the over and above 7,500. So it depends on the association's call and position that they want to take and litigate this matter before the authorities. So we cannot give any single line answer or digital answer how to go forward on this stand. So there is no clarity in the law as of now. So whether electricity and water be separately invoiced, because we know that on sale of electricity and water, there is no GST. These are all exempted, but still supply of electricity and water but through the association with the single independent meters or in a combined meter, how is it going to be designed and structured? It involves a lot of planning, but as per the advance rulings and the positions taken by many associations, it is not advisable to charge separately and not levy GST. It's my personal view. So what happens to the corpus liable for GST? Corpus is definitely liable for GST as far as the treatment and position and the disclosure in the financial statement and the how it is being treated. It depends on various other things. So it is advisable to collect GST at the time of collection of corpus fund, provided you are going to use it immediately. If you are going to use it for after 3 years or for a future period, then you have to clearly mark it as deposit. Only then it will not be liable for GST. And at the time of utilization, necessarily it has to be offered for GST. So how is Rule 42 applied for T1, T2, T4 credits and all that? Whether all the input tax credit are to be taken as a common credit, or it can be related, how the input tax credit can be treated with respect to Resident Welfare Association. This is a very, very big task. It has to be done carefully on a month-on-month basis, and also as per the new changes, input tax credit, reclaim ledger, and then reporting and opening balances establishing. There are a lot of changes in the recent times. So Resident Welfare Association will have to take due care when it avails the input tax credit, because the billing cycle happens on a quarterly basis, whereas input tax credit is a recurring monthly affair. So whenever they avail and reverse the input tax credit, due care should be taken. So does the concept of mutuality still prevail? As I mentioned earlier, it is purely the stand and position taken by the Resident Welfare Association. Of course, the constitutional provisions prevail over any other statute. So thank you so much for your patient listening. And also, I thank the organizers for giving me this opportunity to present before all of you. Thank you so much.